Hi, hello, namaste, hearty welcome to yet another interesting iLead Tax Talks. Thank you very much for subscribing to our channel and then encouraging me, my team, by sending us questions and sharing this, with your friends and colleagues. Hearty welcome. I'm Nanda Kumar. I'm a licensed enrolled agent, a certified public bookkeeper, and I've been working with cross-border taxpayers, specifically Indian and then South Asian professionals in the USA for over 22 plus years now. Today's session is one that I've been wanting to do for a long time because I see this situation in my office over and over again. And every single time the client is shocked, literally shocked. They had no idea. And today we are talking about a very specific profile, a Canadian citizen who also holds a green card. Now, some of you watching might be thinking, Nanda, I'm Indian, not Canadian. Why does this apply to me? Good, very good. Let me tell you, stay with me because even if you are an Indian living in the USA, or if you have a family member who went to Canada first and then came to the USA, this session is directly relevant to you. And here's what we are going to cover today. Okay, look at this title slide. Now, I will be covering uh, foreign home sale, missed F bars, fat card, dual residency, sale of home exclusion, PIFIC risk, and all. Of course, not in one episode, but in different episodes. I think it will go up to 4 or 5 episodes. I'm not sure, but based on how the questions keep coming, I'll keep making videos, and all this is done absolutely free because of your encouragement and support. So thank you very much. Now, every single one of these is a real IRS compliance trap that costs real people real money, sometimes hundreds of thousands of dollars. So, if you are a green card holder with accounts or property outside the USA, not just Canada, even if it is in India or anywhere else, I think you should watch this video. As I said, this session, this particular title, probably I'll be breaking it into multiple episodes. So I encourage viewers to subscribe and hit the bell notification icon so they don't miss the future episodes also. Okay, so let's get into the session. Yeah. Now, special attention to Canadian citizen with US green card holders. Okay. Now let's talk about who this affects. Okay. The section 1, who this affects. See, understanding your cross border tax status is very important. Now, before I get into the technical details, I want to make sure you understand who we are talking about. Because this is not a narrow niche situation, this affects millions of immigrants in the US right now. Now, the green card holders living outside USA, okay, the hidden trap. This slide has a very powerful title, okay, the hidden trap. And I want to start with what I call the most dangerous misconception in cross border taxation. I mean, if you're a young lad, you feel that, I'm talking little slow, please set it to 1.25x speed or 1.5x speed, okay? Because I have elderly clients also, so I have to catch up with them. Now, here is what millions of people believe. See, I have no US job, I have no US salary. I'm living in Canada or I'm living in India, Dubai, Singapore. Therefore, I don't need to file US taxes. The IRS doesn't apply to me. Sorry to disappoint you, but you're wrong. Completely wrong. And this is not a gray area, this is black and white under the US law. Here is the legal reality. See, once you have a US green card, from the day that card is issued, you are a US tax resident. I encourage you to watch this on bigger screen so that you get the content also right here. The IRS calls you a lawful permanent resident. Understand these terms, okay? I also run a tax academy in India, iLead Tax Academy. So my students, uh, you may feel like I'm teaching my clients also. Yes, I want to educate my clients because an educated client will avoid penalties, will avoid any wrong consequences, any repercussions, right? So that's the reason, why I educate. Now, the IRS calls you a lawful permanent resident. And what does that mean? It means you have worldwide income reporting obligations. It means you must file Form 1040. It means F bar applies, FATCA applies. Now, for those of you who do not know what is F bar, it means Foreign Bank Accounting Report or Foreign Bank Accounts Report. FATCA, Foreign Account Tax Compliance Act. Okay, probably in the next episode or something, I'll cover what is F bar, what is FATCA, and all. Once you cross a particular threshold, let's say more than $10,000 outside of USA, more than $100,000 or $50,000 outside of USA, you will have to file F bar or FATCA relevantly. But all of it applies regardless of where on planet Earth you are physically living. And I want to speak to my Indian audience specifically here for a moment. How many of our clients came to me and said, Nanda, I got a green card through my cousin's sponsorship, in 2018 or something. But I stayed in India. I never moved to USA. I never had a US job. So I never filed. That's a ticking time bomb, my friends. A ticking time bomb. Check how many of your friends got their green card but continued living abroad for some time, or this kind of situation applies to them. See, I don't want to say you will definitely get penalized, all those things, okay? I would likely say that you may have a compliance gap that needs to be reviewed by a specialist immediately. The very fact that you have a US green card, so though you are in India or in Canada, I think you need to have a proper tax expert, a licensed tax expert. Could be a tax attorney, could be an enrolled agent, a federally licensed enrolled agent with the Internal Revenue Service like us, or a local CPA, whomsoever you're comfortable with. Now, I will give you some real world examples, okay, some real cases, okay, that I would like to share with you. Now, there's a client by name Priya, okay, I've just changed the names. So Priya gets her green card in 2019 through her husband. She stays in Toronto, Canada, while her husband works in New Jersey. She never files a US return because I have Canadian income, I pay Canadian taxes. That's her understanding. In 2024, her husband applies for US citizenship. Now they need to fix Priya's filing history, and it's a mess. Okay, that's giving you some examples. Okay, I don't know in which case study you may fall into, but giving you some examples. Another example is Ramesh. Ramesh gets his green card through EB3 in 2020. He stays in Hyderabad because his employer did an L1 conversion. He thinks his HR handles, his taxes. But sadly, nobody files a 1040. Nobody filed or files a 1040. Company may recommend. We are also tied up with so many companies. People like you, they recommend us in company to conduct sessions like this in their company for free. We don't charge anything. So company can recommend a tax service provider, but company will not most likely be filing your taxes. So in Ramesh's case also nobody filed a 1040. Now by 2025 he has 150,000 plus US dollars in an NRE account, a rental property in Hyderabad and SIPs. Now the IRS has FATCA data on all of it. When we when he tells us, he's shocked. Important. Let me give you another example of a Dubai client. Vikram. He earns some $400,000 in Dubai, zero local tax. He got a green card in 2021. He never filed a US tax return because he thought that no tax in Dubai, Nandaji. So, no problem, right? I said wrong. Wrong. The IRS does not care that Dubai has zero tax. He owes US tax on that income minus any foreign tax credit, which in a zero tax country gives him zero FTC protection. FTC means foreign tax credit. Getting it? Let this sink in. Watch it again if you want to. Now you understand, why I say this is the most dangerous trap. Now, let's understand what is worldwide income. Okay. See, for a US resident or a US citizen or a US national, worldwide income is taxable on their US tax return. I say this in our classes also. Okay, so students may feel that I'm again repeating the same thing. Worldwide income. Let's understand this. What worldwide income actually means, because when the IRS says worldwide income, they mean it. Let me go through each type of income and what it means for you. Okay, now first one, Canadian and foreign bank interest. See, any interest you earn on a Canadian checking account, a GIC means guaranteed investment certificate, basically like a FD, fixed deposit, any savings account abroad, every rupee, every loonie, every dirham of interest is reportable on Schedule B of your Form 1040. There is no minimum threshold for income reporting. There's no minimum threshold. Now, here is one that shocks every Indian client I've ever worked with. NRE account interest. I have some celebrities from South Indian movie industries also who file. For those of you who don't know, NRE stands for non-resident external account. I see this mostly with them, okay, with the celebrities. The Indian government specifically designed NRE accounts so that the interest is tax-free in India. It's a benefit for NRIs. Wonderful benefit, right? But, and this is a big but, okay, the IRS doesn't care about Indian tax exemptions. If you have a green card, that NRE interest is fully taxable in the USA every year without exception. Arthamainda Raja. The NRO account. Another thing is the NRO account. That's the non resident ordinary account. This is partially taxable in India through TDS, but fully taxable in the USA. See, the foreign tax credit may help reduce the double taxation, but you still need to report it. Then there is rental income. If you own property in India, Canada, anywhere, and you are renting it out, that rental income goes on Schedule E of your Form 1040 in the USA. And we need to do a full foreign tax credit analysis to determine how much credit you get for the taxes you paid abroad. Next thing, foreign capital gains. If you sell a stock, sell a property, sell any asset anywhere in the world, it is taxable in the USA. And we have to convert everything to US dollars at the historical exchange rate on the date of each transaction, which creates some very interesting and sometimes very painful results. We will come back to that in section 3 or something when we talk about the home sale. And finally, the PIFIC income. Thank you very much to all my clients for making my PIFIC videos viral. People started asking me, have I tied up with IRS and all? And some CPAs and enrolled agents were unhappy with me that I made so much free content available online. Anyways, I love my students, I love my clients, and that kept me going for the last 22 years. I tie up with some of the Fortune 500 companies. Okay, so educating you is my job. Implementing what I educate is yours. Okay, so I leave the choice to you. Now, PIFIC. I think I made some 5 or 6 sessions on PIFIC, so I encourage you to watch that in this YouTube channel. If you go to iLead Tax Planners playlist, you will find more videos there. Now, PIFIC, it stands for Passive Foreign Investment Company. This is the one that nobody knows about until it is too late. If you have Indian mutual funds, SIPs, ULIPs, or Canadian fund of funds, you are sitting on a PIFIC exposure right now. We will cover this in section 2 probably in detail. So I don't want to scare you just in section 1 or give you too much of information, but make a note. If you have an NRE NRO account, if you have a Indian mutual funds or SIP, if you have rental property in India or Canada, please make decent notes wherever needed. Now, yes, now I want to introduce you to someone. His name is Ajay, and I want to be very clear. Ajay is a composite case study. Okay, he represents the pattern I see in my practice over and over again. The names and some specific details are illustrative, but the tax issues are 100% real. So, Ajay is a Canadian citizen. In 2017, he obtained his US green card. His wife was working in New Jersey, so he went through the process, got the card, and then continued living in Canada. He was earning some $200,000 plus per year, comfortable life, paying Canadian taxes, thought everything was fine. From 2017 to 2022, 5 years, he never filed a US tax return. Never filed an FBAR. Never reported his foreign accounts. Why? Because nobody told him he had to. His Canadian accountant handled his Canadian taxes. He had a local CPA in New Jersey or something who prepared his wife's tax return, and nobody connected the dots and said, wait, Ajay, are you a green card holder? You have some filing obligations. In 2022, he finally moved to New Jersey. He got a job, started filing US returns, but even then, the 2022 return was incomplete. Foreign income was omitted, foreign accounts were not disclosed. In 2023, he sold his Canadian home. Canadian home. About $300,000 of Canadian dollar gain he got. He didn't report it to the IRS. He figured that Canada's principal residence exemption covers this. So no tax in Canada, no problem. That assumption, as we will see, was a very expensive mistake that our friend made. By 2026, a letter from Scotiabank arrives. His bank account had been reported to the IRS under FATCA, and suddenly the last 9 years came crashing down at once. Does this story sound familiar? Have you been in a similar situation, or do you know someone who has? Get them to get in touch with me or their accountant. Now, this slide is one of the most important slides in section 1, episode 1. Because these three myths, I hear them almost every week, in my iPlan consultation calls. Let me break them down one by one, okay? Myth number 1: Nandaji, I had no US income, so no filing required. See, this is factually incorrect under the Internal Revenue Code. See, as a green card holder, your filing obligation is triggered by your status, not by your income source. You could have zero US dollars of US source income and still be required to file Form 1040 and disclose your worldwide income. See, the IRS doesn't care where the money where the money came from. It cares who you are. And are you a US tax resident, a US tax citizen? Next, myth number 2. Nandaji, I lived outside the USA. The IRS doesn't apply to me. I wish I had a dollar for every time I heard this. See, the IRS jurisdiction over US tax residents or citizens or nationals is not geographic, it is status based. A US citizen living in Australia for 20 years still owes US tax returns every year. A green card holder living in India still owes US tax return. Doesn't matter if you have never set foot in the USA, after getting the green card. You should know these things. I mean, not complying with it is 100% your choice, but educating you is my responsibility. Next, myth number 3. Nandaji, I already paid Canadian taxes. That's enough. See, this one is particularly painful because people feel they have done the right thing, and they have in Canada. But the IRS doesn't accept the Canadian tax payment as a substitute for US filing. Now, there is relief available through the foreign tax credit, which helps avoid double taxation, but you have to claim it. You have to file for it. And you can only get it if you file a US tax return in the very first place. Which of these three myths did you believe before watching this video? Not to judge you, I think this is a very safe space to learn. now, now, here's where it gets really interesting because holding a Canadian citizenship on top of a US green card creates a very specific web of overlapping rules. Let me walk through each piece. The first thing is worldwide taxation. We have covered this. Every dollar earned anywhere is potentially taxable in the USA. No debate there. Okay. Second thing, the treaty complications. See, Canada and USA, they have a very comprehensive tax treaty The US Canada Tax Treaty of 1980, updated multiple times since then. And this treaty does offer relief in certain situations. But, and this is critical, you cannot just pick up the treaty and start applying it yourself. Treaty positions require a specialist review. Applying a treaty position incorrectly can have consequences that are actually worse than not applying it at all. We will come back to the treaty in session 4 or something. Now, third thing is F bar and FATCA. Two separate reporting regimes. Both apply, neither replace the other. Some people feel, नंदा जी मैंने फैट का ही फाइल कर दिया, अभी एफ बार की क्या जरूरत है? No, both are important. Both are important. We will cover both in section 2. That's our next episode. Now, fourth is foreign home sale. This is the one that caught Ajay. Canada has a wonderful thing called the principal residence exemption. You can sell your home completely tax free in Canada, but the IRS says, wonderful, now report it to us and let's calculate the US gain in USD. The Canadian exemption provides zero automatic relief from US reporting. More on this, we will do it in section 3. And then finally, the PIFIC exposure, which I made too much content. The PIFIC rules, the Passive Foreign Investment Company rules, foreign mutual funds, SIPs, ULIPs. Now, these face one of the most punitive tax treatments in the entire Internal Revenue Code. We will spend significant time on this in section 2. But know that these are very complex topics. These are not something that you can Google or AI and try to get it. Yeah, no. There's a cinematic timeline we have made here. The silent years of non-compliance. See, this slide tells Ajay's entire story as a timeline. And I want you to notice something very important as I walk through this. See, non-compliance doesn't start with a dramatic decision to hide money. Right? Not everyone wants to do that. It starts with silence. Ordinary silence. Small omissions. Overlooked forms. Mistaken assumptions. Now, if you see here, from 2017 to 2021, 4 years, no US returns filed, green card obtained, living in Canada, every year that passes adds another layer of exposure. But nothing happens. No letter, no audit, no knock on the door. The silence feels like safety, isn't it? 2022, he relocates to New Jersey. He starts filing, but the first US return omits the foreign income. The foreign accounts are not disclosed. It's a partial filing. Now, partial compliance is not compliance. 2023, the Canadian home is sold. $300,000 Canadian dollar gain. Not reported to the IRS. Section 121 analysis not done. That's what sale of home exclusion. And this is now a potentially taxable event that the IRS has no visibility into yet. 2024, another year goes by, F bar missed again, FATCA missed again, the mountain of exposure keeps growing silently. 2026, a letter arrives from Scotia Bank. Routine bank communication, FATCA reporting, and that letter changes everything. Now, here is the most important line on this slide. Every year of silence is another year of compounding IRS exposure. Every year of silence is another year of compounding IRS exposure. See, I think you now understand who Ajay is among you. You understand the green card tab. You understand the 3 myths that cost immigrants thousands of dollars. But here is what I haven't told you yet. How does the IRS actually catch people? What are FBAR and FATCA really? What happens when your Indian mutual fund becomes a PIFIC nightmare? And what does that Scotia bank letter actually trigger? So, in our next episode, section 2, we go deep into 4 biggest tax traps: FBAR, FATCA, foreign income, and PIFIC. And trust me, you do not want to miss what comes next. Subscribe right now, hit that bell icon, and any questions, please write to me, ask Nanda at iLeadTax.com. You have the Calendly link, the tax planning consultation link. If you want to schedule a call with me, you can click in the description and find a slot that is convenient for you. I'll see you soon in the episode 2. Please do like, comment, share it with your friends in Canada also, so that they know this. Yeah. See you soon in the next tax video. This is Nanda Kumar at iLead Tax LLC. Take care and have a wonderful day ahead. Bye bye.